Hello, welcome to Perspectives channel. Different angles on the same situation. What are the roles and responsibilities of a focal point representing a venture capital firm among its invested startups? We will try to understand better that question through different answers that do not represent the absolute truth, are fictional and exaggerated. We are now speaking with the director of a venture capital firm who manages a portfolio of 5 startups that have received investment from this fund. Let's get started. What is it like to source and manage the startups that your venture capital firm invests in? Well, first of all, it's a pleasure to be here. Let's get to the first type of response, the corporate standing response. I hold a degree in business administration and I'm currently completing my MBA in business management. I've taken countless courses in technology, artificial intelligence, and people management. I participate in several hackathons and incubators, both as a mentor and as a member of the evaluation committees for startups applying for incubation. Most importantly, I was an entrepreneur myself. My fintech startup was acquired by a large financial group. In fact, that same financial group is one of the limited partners in the venture capital firm where I work today. When my fintech received investment and was eventually sold, I became close to investors and was invited to join them, given my experience in making a startup work, taking it through traction and scaling until the exit. I'll try to keep my answer succinct, as we could talk about this for a lifetime. Given this background, I have experience both in selecting startups for capital injections and management support, and in ensuring they grow sustainably once they receive the backing. When I'm analyzing a startup for potential investment, I look closely at the founding partners and the team, their life story, their previous professional experience, and how they prepared themselves to launch the company. It is also vital to analyze how they work as a team and whether they have the right people in key roles. For example, there's no point in having a tech startup without a developer directly involved, whether as a partner or a co-founder. Likewise, let's say an agro-tech company startup won't work if no one involved has previous experience in the field. You can't just have administrators and sales reps who have never set foot in the sector. Founders need to know how to work both independently and as a team. They must be self-driven, not just working because someone told them to. They need intrinsic motivation, energy, and a never-satisfied mindset. Good enough doesn't exist. Only how can I keep improving thinking. Secondly, the idea must have market fit. In other words, your startup needs to actually solve a problem or market demand, and most importantly, people must be willing to pay to have that problem solved. Let's take another example. There's no point in creating a startup that sells sand at the beach or ice at the North Pole. Even if it's an innovative idea, it must meet a demand. You might ask, what about the rise of social media? People didn't know they wanted it. Like Orkut or Facebook or smartphone didn't even exist yet. But my argument is that the intrinsic human demand for communication and the natural need for social acceptance has always been there. Since the dawn of humanity, hasn't everyone enjoyed being admired and receiving compliments? That's why social media grew the way they grow. Last but not least, you have the people and you have the idea, but is there a plan to execute and implement it? You can't just have people and idea without a plan. There must be a roadmap that when, who, how, what, the effort required, and the resources needed to be executed. Would you put your money or your time into something disorganized? No matter how much you like the people and the idea, you won't risk your capital if you don't believe they can actually ship the product. Does it matter if you have the best soccer players in the world if you don't have a tactic for how they play? It would just be a mess. Okay, so what would be the second type of response, the sincere response to your question? Look, to be perfectly honest, to select the startup to invest in, I have to be convinced that the founders are going to give their blood, sweat, and tears to make that startup work. Of course, the scope of the business matters, but the most important thing is the people behind it. Here at the venture capital, I need to know they'll be thinking and grinding 24/7 to make the startup scale and gain traction. They need to have a flexible enough profile so that they don't get stuck on an idea or model that is proving not to work. I'm not saying they have to change the core idea or purpose of the startup. That's not it. But if their product or service isn't taking off the way they imagine in their sales model, for example, they need to be flexible enough to adapt to a different sales model and adjust the product or service accordingly. It's not about changing the product from ice to potatoes, but from ice to ice water, for instance. The product is meant to quench thirst, not satisfy hunger in this example. Going back to the grind, I have to see that the founders have no other option in life but to make the startup succeed. They don't have a plan B or C for a job, they only have the startup. When I see that in the founders or partners of the startup, our venture capital firm invests in them. And finally, the third type of answer, the ideal world response. In an ideal world, both entrepreneurs and investors will be completely open, sincere, honest, and transparent about the startup. The founders wouldn't be afraid to admit that there's something they aren't fully prepared to do, that they lack certain knowledge, or that something is risky, out of fear of losing the opportunity or investment. And on the other hand, the investors should lay out on the table what they truly accept as risk and what they consider to be the basics. There wouldn't be meetings filled with buzzwords from both sides. Instead, there will be open encounters about I need these and the risk is that. And I'm looking for this and I accept these risks. There would be no hidden agendas on the other side. In this ideal world, there will be no games. Founders wouldn't need to build marvelous spreadsheets and presentations, sugarcoating the pill to gain resources and time. And investors wouldn't need to be constantly monitoring and controlling everything out of view of uncertainties involved. And most importantly, in an ideal world, the goal wouldn't be to maximize financial returns for everyone, but rather to develop and improve society and the world we live in. Ideas wouldn't emerge just because they make a lot of money, and people wouldn't seek out those ideas just to get rich. In an ideal world, we would all have the conscience to launch and invest in ideas that actually makes the world better, not just makes everyone wealthy. Okay, today we saw three types of different responses for the same question. Remember, there are no absolute truths, and people may have different points of view from yours. Always consider that they may exist alternative takes on the same matter. This will hopefully help you navigate more open-mindedly through life. Knowledge always makes us grow. We never should stop learning. Think about it.